I spend a lot of time making market observations and testing strategy ideas. This is the first time this has ever happened. I saw this today and I wanted to back test it, and I only had one trade in the strategy performance report going back to 2007, 15 years. Let me see here. This is, I call it test gap 3, and let's look at the performance report. There was only one trade, and that is today's trade. Only one time this has happened. The data goes back to 2007 for the advanced decline line. There is more data that you could use using the advancers minus the decliners, but based on what I'm looking at here, going back to this data set, first time this has ever happened. And you see, what you see here is the advanced decline line opening below minus 2,000 3 days in a row. So this happened on Friday, it happened on Monday, it opened down here right at minus 2001, and then today it opened right at just below minus 2000 as well. So 3 days in a row where the market opens, where the advanced decline line opens below minus 2000, and then you say, what should you do if that happens? And historically, that's never happened. So to me, it's bearish. I think these are very bearish fundamentals. I guess one could say they're very oversold fundamentals too. I've anticipated that as well. This market, here you have CPI right here last week. Look at the NASDAQ futures. CPI sold off to here. A lot of that move was overnight or in the pre-market, and the market is trading just below that. So it hadn't trended much lower in 5 days, and it's hard to short it during the day. It keeps popping back. Yesterday or Friday there was a gap down rally. Monday gap down rally, and today gap down. You would think, third gap down, that should be bearish, but it rallied and then it rolled over, and now it's trying to rally. So difficult to trade a market like this. The Fed's liquidity, we talk about that a lot. The Fed's balance sheet continues to keep this market elevated and propped up, and so continuous propping in this market, and we still could see another rally even after the sell-off today because of all this. This could mean oversold. Initially, this looks bearish, and so it could be very bearish. But it could also be oversold. In reality, to me, it's an inflection point. And to me, an inflection point, you're going to get a big move one way or another. And so the FOMC meeting is tomorrow, and I'm going to show you the code for this. And you can learn how to test these ideas with this code. It's not a great strategy because it only has a sample size of 1. So here is the code. If time is equal to 9:35 and open of the day of data 2 is less than minus 2,000, and open of the day of 1 day ago of data 2 is less than minus 2,000, and open of the day of 2 days ago of data 2 is less than minus 2,000, then sell short next bar at market. Just a $2,000 stop loss, $2,000 profit target, which is about 100 points. Set exit on the close on @nq.d 5 minute. Could be different ways to trade this. Could be you could maybe use low D of data, use low D instead of open D, and you'll get more trades because the open may not necessarily be that, but the low of the day could be that. So those are different things to look at as well. But that's what I have initially. This has never happened before. This is how you back test it, and it could be an inflection point for much lower prices or much higher prices. It's tricky to say. Fundamentals are bearish, but the liquidity is still there to support this market and push it higher. So we are short-term traders. We can see a big move either way.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.